Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Happy pre-Halloween, Megan. Sorry for that.
All right. There is not a ton going on this week. Cold storage is really the only report we're going to dig into. We'll also probably talk a little farm bill now that we have a speaker in the House and we can get some things moving and some action and some work being done there. To recap what happened though this week, let's talk about the markets, which didn't exactly have a great Monday.
Yeah, no, that's for sure. You saw on the cattle side this week, fed cattle were down $2.40 this week. That puts them now $32 above where they were a year ago. So we're still above year ago levels, but we certainly came down from where we've been. Feeder cattle markets, tough week for feeder cattle auctions this week, 7 to 12 lower. Futures side was also lower. December live cattle futures contract was down $2.90, and the November feeder contract was down $6.15 this week. That's a $15 lower spill for feeder cattle futures over the last 2 weeks. We did see choice box beef prices nearly $2 higher this week. On the hog side, cash barrels and gilts down again this week, down $1.50. We did see December lean hog futures contract go up $4.40. The pork cutout value was also lower this week, down roughly $1.60, which here's one where down $12.40 on the pork cutout value relative to where we were a year ago. In comparison, we're $45.40 higher on the choice box beef price today than where we were a year ago. And the lower pork cutout value, loins, butts, and picnics really drove this week, not bellies for a change.
Well, you and I texted a little bit on Monday after the markets opened up. It was a really, really negative reaction to not only cattle on feed report, probably, I'm assuming, a lot of other broader market issues that are happening. While we did end up the week lower, I think we've done a fairly decent job of clawing at least a little bit back from where we started.
Yeah, for sure. So that cattle on feed report got folks' attention. I think we tried to claw a little bit of that back as we went through the week. And again, I'll say, I'm not sure we should be surprised that we're getting more interest in feeder cattle from Canada and Mexico coming into the U.S. when we've had record prices. It doesn't surprise me. Feed yards are certainly trying to keep their pens as full as possible. It's what they need to do. At the same time, I still look back and go, September of a year ago placements, to me, were abnormally low relative to the seasonal pattern we were on in 2022. And I think that had a little bit to do with the big increase. Now, we'll see. It's just droughts played such a big role in both what we placed in 2022 and I think what we're placing here in 2023. Because I think, again, we have some folks who may have pushed some calves to the sell barn sooner than normal, just trying to make sure they have enough forage to get the remaining cows and calves through the winter months.
While it's obviously potentially negative in the near term, I would assume longer term, though, that doesn't, or maybe that bodes well for a higher potential price point for cattle down the road.
So absolutely, and you and I talked about this number last week. So 40% of the on feed being heifers just reminds me to say loudly that we're not retaining heifers. I don't think we're building the herd, so the hole probably gets deeper as we look forward. I hate to say that too loudly again because it suggests higher prices ahead, even though we've taken a little step back here over the last couple of weeks. Demand, of course, could wreck that if demand were to weaken a lot. I talk all the time about risk management. I would like for folks to remember 2 weeks ago was the right time to do risk management on cattle, not today. And I'm not saying you shouldn't consider it today, but don't knee jerk to what's been much lower prices the past couple of weeks. I think there's still some upside here. What I'm trying to say is, boy, when we were at those record levels, it's hard not to protect some of that downside, and I hope a lot of folks took advantage of that using things like LRP along the way.
Let's take a look at slaughter numbers, and really interesting looking at the numbers week over week in comparison, because there's not been a lot of change both on the hog and the cattle side of things.
That's right. You look at hog slaughter for the week ending October 28th, USDA tells us 636,000 head of cattle to be slaughtered this week. That's only 2,000 lower than what we did a week ago, but it's 31,000 head less than we did a year ago. On the hog side this week, a run of 2.614 million head of hogs this week. That's only 4,000 more than we did a week ago, but it's 50,000 more than we did a year ago. So yes, relative to last week, not a big change, but relative to a year ago, it certainly sticks out for both cattle and hog slaughter.
Let's take a look at those year over year numbers percentage wise. How are those stacking up?
Yeah, so cattle slaughter is down 4.6% year to date, and hog slaughter up 1.4% year to date.
Cold storage, big report out this week. As we take a look at what's in freezers in both beef, pork, and poultry, there's definitely some changes year over year.
Yeah, for sure. So on the beef side, into September, 420 million pounds of beef in freezers. That's 20% below where we were the same time a year ago. And even now, when we start to look at pre-COVID levels, we're 10% below where we were in 2019, 11.5% below where we were 2017 through 2021. Just to highlight, fairly tight. On the pork side, 463 million pounds of pork in freezers. That's down almost 14% from a year ago. It's down nearly 23% from where we were in 2019, just to put it in perspective. I guess as I look at those components on the pork side, loin stocks up 1.9, keeps reminding me to say, what can we do on the loin side to get better demand going? Almost every other category of pork was lower relative to a year ago, and 30 million pounds of bellies in freezers is not a large inventory there. On the poultry side, so avian influenza could certainly still have a role here as we go through the year. 844 million pounds of chicken in freezers. That's 3.4% below where we were a year ago. Breast meat's up nearly 14%. That's the probably negative picture. Leg quarters down 32%. Just to give a little flavor of what's happening, I think, on the demand side there. And turkey stocks 419 million pounds of turkey in inventory as we're getting ready for the holiday period. That's 7% above where we were last year.
Obviously, avian influenza is such a interesting animal when it comes to what happens to stocks in general. How much are we watching these cases this time of year? I mean, thinking about going into holiday baking season, if we're thinking about the egg component, or holiday meal season with Thanksgiving and Christmas, and those holidays just around the corner.
So I think it's important to be paying attention, and we all know we've seen more cases now starting to crop up in the northern parts of the U.S., north central, and to me that begins to say what happens as it gets colder to the south. Are we going to continue to pick up cases? This is a really tough one. If we get a lot of cases of high path AI that cuts any of these poultry categories from a production standpoint, we'll go back up really high on prices. But if we just have a few cases along the way, I think it'll be continued downside risk in these poultry products. Sideways maybe is not an option anymore when we think about where markets go.
Scott, before I let you go today, I think we get to talk a little bit about some potential progress on a farm bill. Speaker is in place. Speaker Johnson out of Louisiana has been fairly pro-ag in the past. And it appears to know priorities and know that both the Ag Appropriations Bill and the Farm Bill are critical pieces to keep agriculture and farming moving in this country. Laid out a pretty aggressive plan about how to get things done. I'm assuming Farm Bill extension still has to be like at the top of list to get things done at this point.
So yes, I think you're correct. I start with appropriations here for a minute. So we started the fiscal year October 1. We know we have a CR in place that gets us towards the end of November. And we're seeing the House now start to move individual appropriations bills. And I believe the Speaker has suggested he wants all those appropriations bills to the finish line and go through the normal process. That's going to take a lot of time, I think, to happen. Ag appropriations for FY24 did make it off the House floor this week. And so I think a lot of focus on just getting appropriations done here in the short term. From a Farm Bill perspective, to me, more and more are saying extension is needed. And number one, we needed an extension. We don't want to revert to permanent law. I sometimes go further and say we won't revert to permanent law. We'll figure this out one way or the other. But there's reasons to get that done, so we don't see USDA starting to implement any of those permanent law provisions, most of which become more binding once we get to January 1. I think we've seen a lot starting to signal a year-long CR, also signaling maybe they don't need a year to get the Farm Bill to the finish line. I don't know what early 2024 looks like at this point, but I think the window to finish would be relatively narrow, because once we get into election mode, I don't see any more work being done to try to get a Farm Bill done. So maybe that pushes us into 2025. We'll have to wait and see. And of course, more financial stress at the farm level could accelerate that schedule. Perhaps relative to what's been maybe less. Everybody's happy with what crop insurance seems to be doing from a safety net and aren't looking for massive wholesale changes out of this Farm Bill.
There's a lot of work to be done, and I'm glad it's not my job or your job to make that happen in a timely manner.
I am glad not to be trying to write legislation either as a member or staff. It is not fun trying to get the Farm Bill to the finish line at this point in time.
Scott, as we look ahead to next week, a couple of reports we're going to talk about in terms of consumer and the demand side of things. What are you looking for in Restaurant Performance Index and the jobs report?
So I'm curious, just especially on Restaurant Performance Index, whether or not we see any drag from what's been happening as consumers. So they appear to be spending from the numbers we're getting out. We got third quarter GDP out that seemed pretty optimistic. So spending, but not saving. When does that potentially stop? Maybe the Restaurant Performance Index helps us on that front. And then jobs report. I mean, this is one that's been cutting both ways for us. We always say more jobs is good from a meat demand perspective, but more jobs might also mean we continue to have to fight inflation and could raise interest rates. So those are a couple of reports that I think will be important from kind of the macro perspective as we look into the future.
Scott, it's always great to see you. We'll talk to you next Friday.
Sounds good, Megan.
To have a weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens every day in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.